not let the Prime Minister sleep till he announces a national loan waiver for farmers across the country. That's Rahul Gandhi. From Rahul Gandhi to the Prime Minister, speaking at an event in Mumbai, the Prime Minister has promised a simpler GST regime and gone on to say that 99% of items will soon be under the 18% tax slab or below that. The Congress party has been clamouring for pruning the 28% tax slab. In fact, just last week, we reported that Congress finance ministers and non-BJP members of the GST Council were likely to hold a huddle ahead of the weekend meeting of the GST Council. We now have 14 non-BJP members in the Council, which has a total strength of 31. We also understand that big-ticket rate cuts are unlikely in the upcoming council meeting. At least that is the recommendation of the CBIC officials. But remember, this is going to be a political call that will be taken on Saturday. That's the 22nd, when the GST Council meets. Remember, Centre and the states are both worried about the monthly GST revenue collections, which continue to be below the government's asking rate. In this fiscal, we've crossed the 1 lakh crore rupee mark only once in September. So the question now is there room for significant GST rate rationalization? Joining us now to discuss both the issues, the agrarian economy as well as what we should expect from the GST Council meet, Manpreet Singh Badal, Finance Minister of Punjab, Thomas Isaac, Finance Minister of Kerala. Gentlemen, appreciate you joining us here on the program. Mr. Badal, let me start by asking you, and I'll pick up on the simpler of the two issues, and that has to deal with the GST Council meeting on the 22nd. The agenda, I believe, has been circulated. We've heard from the Prime Minister today saying that 99% of the items will be in the 18% slab or below. Further pruning of the 28% bracket is warranted. The Congress party has demanded always that there should be one single rate, and you have said that it should be capped at 18%. Now, given the reality today, political as well as economic, the economic reality is that we're still below the asking rate of over 1 lakh crore rupees in terms of monthly GST revenue collections. But the political reality is that 3 big states have been lost by the BJP. Do you believe that in the meeting of the GST Council on the 22nd, we could see significant rate rationalization being announced?
Well, Shireen, I want to start on a lighter note. You're probably looking at one of the most worried human beings in the Indian subcontinent, next only to Mr. Asad Umar, who is the finance minister of Pakistan, because he has to pay back $32 billion next year. But having said that, I must confess that the design of the GST, and Congress has been saying it ever since the first meeting in Srinagar, it's a bad design. And once GST is designed badly, it's very, very difficult to fix it. And what the Prime Minister has announced today, and I would take exception to that, because whether rates need to be cut or some rates need to be increased or whatever, that is not the prerogative of the Prime Minister. That is the prerogative of the GST Council. The agenda has not been circulated. GST Council, because we have pooled in our sovereignty, all states and the centre together. But I have seen in the last 1.5 years since GST has started in India, that I've seen it during the Gujarat elections, and I have seen it in other elections, and now I think the government is in a election mode. But I personally feel that the GST Council should not be a forum of populist policies. And if there are any rate cuts, Congress has been advocated against the 28% slab. But then a holistic view must be taken.
Mr. Thomas Isaac, do you believe the time is right for further rate rationalization? And I don't mean tinkering. I mean moving cement out of the 28% slab down to 18%, for instance, which has been one of the big asks. In light of what you've heard from the Prime Minister today, do you believe that the GST Council, the centre, will push significant rationalization, if at all?
Now, the story of GST in India has become a story of knee-jerk reactions to whatever happens just before the meeting of the GST Council. And now, you may have difference of opinion, but after very long deliberations, a rate structure was created. And now, even if you are going to change the rate structure, it must be after very serious deliberations, when agenda is circulated sufficiently early. I find when Piyush Goyal was in fact chairing it, it was not intimated that they are going to discuss the rate structure. In fact, I was absent in that council, and you find a massive slashing of rates from 28 to 18 and so on. Now, I have always supported this 4-rate structure. I never supported 1-rate structure. Reason is simple. In India, there are commodities that very, very poor people consume. They should be rated at very low rate or exempted. And there are commodities which are not that essential, which are the consumer durables and so on, where traditional tax system, pre-GST system, they were suffering a rate anything between 35% to 45%. They were all reduced to effective rate of 28%. Now you are reducing to 18%. Now there is something called distribution. The distributive impact of tax. You read the canons of taxation, they will teach you first. You have to look at the distributive impact. Now, what is the distributive impact of the reduction? It's becoming more iniquitous. The richer people are let off, and the poor people, their burdens are not reduced. This is just not right. Particularly when your overall revenue has been far below.
Yes. In that context, my simple question, since the overall GST revenue collection has been below the asking rate, if the centre, through the Fitment Committee, were to come up with significant rate rationalisation on the 22nd, what are states going to say? What will you say, Mr. Isaac?
I oppose it. I oppose it for the simple reason.
You will oppose it?
This is not revenue neutral rate. The VAT structure today that exists, yes, the VAT structure that exists today is not revenue neutral. And you see, Kerala is a state which is committed to large-scale social spending. And our revenues must grow at least by something around 20% or 14%, which is guaranteed by compensation. Now, states have been, we have historically chosen a path of development. Now we are forced to derail from that. Suppose I say, therefore, there should be flexibility in the GST system. Suppose a state like Kerala wants to have a higher rate for consumer durables, they should be permitted to do so. You should not use the majority to cut down, slash down from a rate which has been
But doesn't it negate the very purpose of a GST, sir? But doesn't it negate the very purpose of the GST then, if each state is going to have the flexibility to hike rates as it choose?
No.
Okay, you believe it doesn't, but let me come back to you. We've also got Aditi Nair, principal economist at ICRA. I'll come back to you in just a second. I'll just come back to you, sir.
Let me inform you.
Mr. Isaac, give me 30 seconds. Okay, go ahead. Go ahead.
Okay. I must tell you, the time of empowered committee deliberations, which went on for about 6 years on GST, the general understanding was for the states there would be a band within which they could tweak the rates. It was a flexible system. In a complex country like India, with the regional so much diversities, it is important to have that federal flexibility. Now, after having reached an understanding about a revenue neutral rate, you are unilaterally reducing the rates and that to higher into the bracket, putting states which have been tuned to certain level of spending into serious problem. Therefore, it is not acceptable to me. No, it is not. If you want to reduce the rate, abolish the rate when the necessity is. Then it will be free.
Yeah. Okay, all right. Let me go across to Aditi Nair, principal economist at ICRA. Aditi, thanks very much for joining us. ICRA has put out a report flagging concerns on the shortfall as far as indirect tax collections are concerned and the implications for state governments. We've got a GST Council meeting coming up on the 22nd, Aditi, and while officials within the government seem to suggest that there is no elbow room for significant rate rationalization, the call from the Prime Minister is that the 28% bracket should be pruned even further. So now, states are grappling with what could be the implications of that for them. What are your key concerns, Aditi, and what are your expectations?
Thanks, Shireen. The note that we put out today is actually highlighting the key risks that we see to the state's fiscal health in FY19. And the first one, as you mentioned, is the fact that in terms of central tax devolution, we do expect that there could be a significant shortfall to the states because of two major indirect taxes of the Government of India. One is the CGST collections, and the second is the cut and excise duty on fuels that was instituted for H2 of this fiscal. Now, interestingly, what we have observed is that in terms of the CGST and the SGST collections, first of all, the budget estimates made by the Government of India and all the states put together are rather different. So while Government of India has put in a budget estimate of CGST collections of 6 trillion for this fiscal, if you look at the data for all states put together, they actually budgeted a much more moderate 4.9 trillion. So firstly, there is this big difference in terms of the budget estimates. Secondly, we have estimated that up to the collections in November 2018, the CGST, after taking into account the normal settlement and the provisional settlement of IGST that has taken place so far, would be around 3 trillion, which is just about half of the centre's budget estimates. On the other hand, our forecast is that the states have been able to garner 3.4 trillion of SGST after the IGST settlement, which is closer to 70% of the 4.9 trillion that they budgeted. So the risk really is that CGST collections will fall short of Government of India's estimate, and therefore central tax devolution would also be lower. But on the SGST side, we see the situation being far more comfortable right now. Of course, if there are further GST rate cuts, then we'll have to assess whether that continues to be the case.
Okay, so the key risk at this point in time is the central tax devolution that you foresee on account of the fact that we haven't seen the collections being coming in line with what the government estimated. But let me go back across to Mr. Badal. Mr. Badal, you know, we both, you as well as Mr. Isaac, seem to suggest that perhaps it would be more prudent to take a holistic picture as far as rate rationalization is concerned, and maybe this is not the time for significant tweaking on the GST rates. But, you know, Mr. Isaac brought up that meeting that was chaired by Mr. Piyush Goyal. Rate rationalization was not on the agenda, yet we saw a plethora of rate cuts coming in. Is that the expectation then on the 22nd, given what we have seen from both the Prime Minister as well as the Finance Minister today, specifically on rates, sir?
Well, Shireen, I just wanted to just bring this also up, that if you look at last month's collection, I'm not sure, it's about 97,000 crores. And out of 97,000 crores, it's 7,000 would be refunds. So actually, you know, these figures actually inflated. So that brings it to 90,000 crores. And 8,000 crores would be compensation to the states. So you're left with 82,000 crores. And if you divide this equally between Government of India and all the state governments, so Government of India is left with 41,000 crores. This is even less than what Government of India was collecting 2 years back in 15-16. So we need to ramp up the technology and, you know, put technology in place where, you know, people find it simpler to file taxes. I mean, you just look at the number of audits which are taking place. There is a departmental audit, CAG audit, there's a 9C audit, special audit, there's an eBay bill. I mean, the trade and industry is actually suffering because of this bad design. And so what in the Congress party we're thinking, because you can't fix it, we have to go in for a GST 2. That's what we're thinking.
Okay. Mr. Isaac, what is this GST 2 going to be about? I am given to understand that non-BJP states are likely to go into a huddle, perhaps even ahead of the GST Council meeting on the 22nd. We heard Mr. Badal talk about the need for fresh thinking. What could this GST 2, what are the ideas that you bring to the table in terms of this GST 2?
Things are reaching a point where we cannot allow this to continue in this manner. Look, December is getting past. But what is the situation? Since GST was ushered in, there has not been a single annual return. Without annual return, how do anybody scrutinize what is due to the government if somebody is taking extra input credit or not? Now, there is only now 3B, GSTR 3B. Now, without the GSTR 2 and 3, how do we examine, scrutinize the return meaningfully? There is no system in place.
Okay.
Please, heaven's sake, allow the system to settle down somewhere before you go on tweaking the rates, changing the rates. And if there is a need to be a rate cut, let it be discussed thoroughly. Revenue implications.
Let's get to the big story that we are tracking back home. Prime Minister Narendra Modi has indicated that the 28% goods and services tax slab would be pruned further and would be restricted to only a few select items, such as luxury goods. Now, Modi was speaking at a Republic TV event in Mumbai today. He said that the government is working to ensure that the GST on 99% of the items are kept at a slab of 18% or lesser. Now, remember, the Congress has been for a long time clamouring for the highest GST slab to be capped at 18% instead of 28%. In fact, last year, Congress President Rahul Gandhi, while campaigning for the Gujarat Assembly elections, had tweeted that the Congress would reduce the GST rate to just one slab of 18% if it came to power in 2019. Now, remember, Modi's comments come at a time when the monthly GST revenue collections are far below the asking rate of 1 lakh crore rupees per month. This fiscal itself, there has been only one occasion when the monthly GST collections have crossed the 1 lakh rupee mark. That's not all. ICRA expects that a shortfall in the government's indirect tax revenue kitty is likely to lead to a downward adjustment in the central tax devolution to states in the current fiscal year. Amidst all these developments, we learned that the upcoming meeting of the GST Council may not result in any big-ticket rate cuts being announced. Sapna Das has been tracking all these developments and she's here to explain and break this up. Sapna, what are you picking up from your sources?
Well, we are clearly given to understand both the centre and the states are being cautious as far as taking forward any major rate cut proposals for the upcoming GST Council meeting on the 22nd of this month. The caution from both the centre and the state side particularly comes in terms of the revenue concerns which are well known by now. So as of now, we are given to understand that there is no major proposal yet for the GST Council to consider as far as rate cuts under GST goes. As far as the cement sector also is concerned, a point over here, we are given to understand that, any lowering of rate for the cement products from the 28% to the 18% bracket will have sizable or other significant revenue implications both for the centre and the states. Around 7,000 to 8,000 crores could be the loss that we are talking about annually. So given all of this, there is an indication that possibly no major rate rejig could be considered by the council. But what may unfold is some kind of rate rationalization, which has been an ongoing exercise as far as GST is concerned. Some of those items where the input rate may be higher than the output rate, some kind of parity may be brought in for those items, but we are clearly given to understand that even that exercise will be more or less fiscally neutral. A few hundred crores here and there could be the fiscal impact. This is what the understanding as far as the rate issue of the GST Council is concerned.
Morning. The GST Council set to meet today. The meeting is the first one after Prime Minister Modi promised a simpler GST regime and went on to say that 99% of items will soon be under the 18% tax slab or even below that. The meet is also the first one after the Congress revival in the Hindi heartland. The 31-member council has 14 non-BJP members now after the recently concluded assembly elections. We are given to understand that no big-ticket rate cuts are likely to be announced today. So what are the expectations from the council meeting today? Shireen Bhan spoke to MS Mani of Deloitte and tax expert Rohan Shah. Listen in.
Mr. Shah, the complexion of the GST Council will certainly change. The Prime Minister has made it very clear. He's listed the roadmap for where he expects rates to head. Do you believe that we're now looking at a situation where what was originally the idea of the 28% slab being only for sin goods and for luxury items, we're finally going to come down to that?
I would think so, Shireen. I think whatever we are seeing in terms of statements, whether made by the Prime Minister or the Finance Minister, and the buzz that generally I think is emanating from Delhi, 28% will cover only very, very few items. You could call them sin goods, but the coverage will be very limited, and which is what it ought to be. Because I think the greater that we have a move towards the 18%, which in most countries is the sort of mean rate, the better off we will be in terms of having a GST of the type that we originally envisaged.
Okay. Mani, let's look at the revenue implications as well. I mean, items like cement, for instance, are still in the 28% bracket, and that could be a significant revenue hit as far as the government is concerned. Now, so far, we've seen the government edging closer to the 1 lakh crore rupee number, but if you discount the refunds as well as the compensation cess, then it works out to in the 80,000 crore rupee range. So there is an issue with revenue collection. With more rate cuts, how concerned would you be?
Okay, so I think revenues have been under pressure. There are no two views on that. They have been under pressure and they continue to be under pressure. Now, having said that, we also need to understand that in the past, when there have been rate cuts, subsequent to that, we have not seen as sharp a dip in revenue as was anticipated. So possibly what is happening is when there is a rate cut, the level of compliance goes up, the number of people paying tax goes up, and the tax base expands. So overall, in GST from the beginning, I think the theme that the government has been playing out with is that if the rates moderate over a long period of time, the tax base will expand. Here again, when I'm talking of tax base, I'm not talking only of the GST tax base. I'm also talking of the income tax base, because both today are very, very closely interlinked. So the tax base overall has significantly increased after GST was launched. The income tax base of taxpayers has also significantly shot up. So when you look at both together, while there will be some temporary pressures on revenue, over a medium term, I don't think there will be too much of a concern on specific items. What would your expectation be in the 35 items that are still in the 28% bracket? What could move lower? Really speaking, I see the possibility of only few products, having a chance to move lower. Cement obviously would be one. Color television exceeding 20 inches in size is another. Dishwashers and ACs and DSLR cameras and video games would be the other. Because I don't see any possibility of aerated beverages, pan masala, or automobiles or automobile parts moving out. Yeah. Those represent a large number of items in this population that you said. So when we talk of 99%, coming below the 18% bracket, we have to bear in mind that even today, already 97% is in that bracket. So it's only moving 2 more percentage. But Mr. Shah, let me come back to you on the simplification aspect of it, because what we're given to understand is that simplified form is unlikely to be rolled out anytime soon, perhaps only in the new financial year. What's the feedback that you're getting from people now, both with respect to things like refunds, with respect to filing? I mean, have things gotten any better? What is it that you would now like the council to take up with the Prime Minister's stated objective of simplification?
I think at a practical level, Shireen, you are finding that, refunds is the one area that people are having really the most challenges with. And that, I think, is to be expected, although nothing impacts sentiment sort of more than the fact that someone who ought to get a refund doesn't get it, especially exporters. What I think you might see, given past record of the council, I think you will potentially see this audit process, which was sort of to get over by end of year. I think you will see a further period or enhancement in terms of that. I also sense that, in terms of transitional credits, which have been a problem area, I think you will see some greater facilitation in the context of that. And, you were talking revenue and revenue impacts of numbers coming down, but one move that I've been watching for a long time, and I think many people would, is will we finally see some move towards petroleum products, even if it's ATF and even if it's diesel, are we going to see some very clear-cut announcement on that? So procedurally, I think you'll see some relaxation on audit and possibly something in terms of transitional credit, and it would considerably help if they would give much clearer signals to the administrative force, in terms of refunds.
Very quickly, sir, in exactly 30 seconds, Mr. Shah, the political bickering, of course, continuing with the Gabbar Singh tax and the good stupid thought and so on and so forth. But that aside, what would your expectation really be with the representation of the council changing? Do you believe that we could maybe now see momentum on things like petroleum, etc., coming in, or ahead of the elections you expect it to be stalled?
No, I personally think it will come in, not because of the recent political changes, because to its credit, the GST Council has been excellent in terms of, speaking in one voice and voting in one way. So I think it will remain a forum of consensus. I don't think the political equation will change that. But if some of the things which ought to have been done get hastened, I think that's only for the better. And petroleum and inclusion of petroleum to me would sort of, be one of those.
Well, the GST Council continues to be in a huddle currently. The meeting is the first after Prime Minister promised a simpler GST regime and went on to say that 99% of items will soon be under the 18% tax slab or even below that. Sources tell cnbc TV 18 that the Council may discuss composition scheme for real estate in this meeting. We also caught up with the Finance Minister of Kerala, Thomas Isaac. He believes that the cement rate reduction is unlikely to happen in this meeting because that was not part of the agenda items. Take a listen.
There are not very big proposals for rate reduction. It's only tweaking of the rates and rationalization. That's what I understand from the agenda notes. But there is a serious proposal regarding reducing the works contract service tax to a lower limit without ITC, which I do not know what is the revenue implication. One has to carefully look at it to ensure that it is revenue neutral, the change proposed. Otherwise, it's routine clarifications and so on. Large number of appeals have come, and the GST Council will be approving the clarifications that are given by CBCI and so on.
Is there a reduction in the prices of the GST on cement too, sir?
No.
दरों का एकीकरण करने का प्रयास, यह शुरू से ही हमारा जीएसटी काउंसिल का एक लक्ष्य रहा है और उसी दिशा में भारत के प्रधानमंत्री जी भी यही चाहते हैं कि जीएसटी की दरें वह 18% के आसपास हों। अधिकतम जो जीएसटी के दायरे में आने वाली सेवा और वस्तुएं हैं वह 28% में अब न्यूनतम जो मिनिमम है वही केवल रहें तो अच्छा है। तो जीएसटी काउंसिल इस भावना को भी ध्यान में रखते हुए और देश और प्रदेश के सभी जो प्रतिनिधि हैं वह जनता के हित में दलगत राजनीति से ऊपर उठ करके हम फैसला करने वाले हैं।
I think let's look at the reality and the way things are going to proceed over the next maybe 5-6 months. There is some amount of work to be done by these panels, and whether it will quickly trigger off any action is also going to get dependent equally on the revenue implications of whatever they do. As of now, from a revenue perspective, there is still a gap that the government is looking at, and that constrains them to some extent of taking decisions. I think that is a problem. On a different level, since we're talking about rates earlier, is it a good decision to go ahead and prune the overall slabs and reduce the overall taxation from 28 to 18 in some of these, or for this particular matter about handling real estate sector slightly more sensitively than what may have been done earlier? I mean, there are problems being faced in that. I think the overall trend, obviously, of looking at these issues is appropriate. Having said that, whether to go with a composition scheme alone would solve it, clearly no, and maybe a little lower rate may help on a generic basis with ITC.
Okay, let's just talk about the revenue situation. And Pratik, let me put that point across to you, because we discussed this with Rohan Shah and Money yesterday. Now, in terms of the asking run rate, which is in excess of 1 lakh crore rupees a month, we're nowhere close to that. We're still edging closer to the 95, 96. And if you then do away with the refunds as well as the compensation, we're in the 80,000 crore rupee ballpark. the worry then is that will they be able to offset the shortfall on the indirect tax side through the direct tax collection, or of course by way of an interim dividend from the Reserve Bank of India, etc. That's a separate question altogether. But the fact that a year and a half on, we're still not hitting the asking run rate when it comes to revenue in light of further rationalization now.
I think these two are unrelated questions, unrelated issues to my mind. I think by having a higher rate of tax, you can't collect more revenue. I mean, world over, it is now proven fact that indirect tax rates, if they're moderate, it increases compliances, it reduces tax evasion, and consumption is more and you collect more tax. So therefore, I think there is definitely a case of reduction from 28 to 18. And there are only 35, 40 items left, and I think few of them will continue to be there, like tobacco and luxury cars, etc. So I think there is definitely a case, and I don't think if you keep cement out, I don't think the revenue implication for the government would be huge. The point on tax collection, is related more to tax evasion, and there is still a large component of the businesses, industries, which is not paying tax, is not part of the organized segment. Recently, member budget made a statement that from April to November, the government has unearthed 12,000 crore of tax evasion. And that is when the data analytics and tax administration is not tight enough. So I think that's the area which we need to focus on. The e-way bills have been introduced, but we have heard that a lot of transactions still happening without e-way bills. The same e-way bills have been used multiple times, that 24 hours, which is allowed for
Pratik, just 1 second. Just a second. We've got the Puducherry finance minister speaking. Let's just listen to what he has to say.
It has come down to 12% and 5%. Because these are all common man consumption.
Today or they will?
Today.
33 items. Okay.
Don't interrupt the between 12 and 5 from 18.
So once again, rates.
Sir, don't interrupt. Therefore, the original demand by the Congress party, that all the goods should come under 18 and below. Now the government has come down, which we have been raising because except the goods which are luxury goods, all other items should come under 18 and below, which has been now agreed by the government, the GST Council. In fact, except about a lot of.
Okay, I'm not sure what he was saying, but our reporter seems to suggest that the GST Council has recommended changes in rates of 33 items from 28% to 18%. Let's just replay. We'll try and replay that soundbite for you. But that was the Puducherry Finance Minister, V. Narayanasamy, saying that the GST Council has recommended changing rates of 33 items from 28% to 18%. Remember, there are 35 items in the 28% bracket. I don't think that can be accurate because at least a bunch of them, at least half a dozen of them fall in the sin goods and the luxury category. So we may need to recheck that because I don't believe that it can be 33 items coming down from 28 to 18%. So we'll recheck that. But sorry, Pratik, I had interrupted you. Go ahead.
Yeah, so what I was saying was that I think it's good news if 28% is coming down to 18. I mean, whether it's 33 or 30, that we'll have to see. But what I was saying was that by decreasing the tax rate, you will not reduce the tax collection. You have seen that happening in November 17, where 100-odd items were reduced, the rate was reduced. Then in July 18, where most of the consumer durables, the rates were reduced. And you haven't seen a drop in tax collections, right? It's maintained around 95 to 97,000 crores now for the last 3-4 months. So I think tax administration is one part. And I think this kind of composition and things like that, if you complicate it further, then those are the precise things that leads to tax evasion. And that's something which GST Council should stay away from.
The point being made there, Rohan Shah, by the Puducherry Finance Minister, 7 items. So that's the correction, and that's what I expected, because it cannot be 33 items. There are only 35 left in the 28% bracket. 7 items the GST Council has deliberated where the rate should be reduced from 28% to 18%. And Mani, we were talking about it yesterday, things like colour TVs that are larger than 20 centimetres and so 20 inches and so on and so forth. But Mr. Shah, on the point that the Congress party is making, that look, we had stated very clearly that there should be a standard rate plus minus, one for sin goods and the other for mass consumption items, and the government tied itself up in all kinds of knots by going into this multi-tier rate structure, and now better sense has prevailed. There is some legitimacy to that argument, is there not?
I think we need to see it from 2 perspectives, right? Globally, if you sort of looked at, nations who have just, let's say, 2 rate slabs, you do have many of them around the 16-18% mark. Now, when we started out this whole endeavor, we had many complications, including what were the incumbent rates of tax and whatever was our taxing ambition in terms of the revenue we had to collect. In that scheme of things, it was sort of felt that, coming through with the structure that we did, which had, let's say, at least four principal rates, was exactly the sort of way to go. And GST Council, which included the Congress, effectively, participated and took a decision. So I think from that perspective, I don't think a critique would be justified. There was always the subtext that you will move to 18 and get as much as possible into the bracket of 18, and periodically there have been actions to sort of do that. I see this as a continuum. There may be a little bit of political background for Congress to sort of keep saying, we told you this originally. But the council sits at once, it decides as one. And I think this gradual change was on the cards, it's happening. And even if it's 7 items now, as long as it's the correct 7 items, I think, it's a move in the right direction. So from that perspective, I don't think anybody ever had the perfect script. In hindsight, we can say we had some better views than you. But these were collective decisions, and I think they've taken us forward. We should respect that.
Oh, absolutely. They've all been collective decisions. In fact, not a single decision in the GST Council has been voted upon. They've all been unanimous decisions. And the Puducherry Finance Minister saying that 7 items where the reduction from 28% to 18% has been discussed, and these are part of the Fitment panel recommendations largely in the consumer category. These were approved by the GST Council. He hasn't revealed which those items are. But Mani, would you like to take a stab at which these items could be that the Puducherry Finance Minister is referring to?
I think a couple of items would be fairly obvious, including what we discussed earlier. Dishwashers and air conditioners would be top of the mind, including color televisions exceeding 20 inches. There are also products like video games, which are classified at 28% now, which ideally should come down. Because if these 4 items come down to 18, then we have the entire consumer electronic sector in 18. These are the only 4 items which are there. And I forgot DSLR cameras as well. In addition to that, out of the 7, I would go to say that they might consider tires and tubes, which are today at 28. They might also consider cement, which remains a contentious sector, because even in the past, cement has always been taxed on a combination of a specific rate and an ad valorem rate. So the mechanics in terms of reducing duty on cement may not be only a function of the revenue collection. It could be larger issues which the government is aware of. So considering these, I would say that 7 items or 8 items moving down is very good. Just one statistics that I wanted to mention. In the previous 8 months of last year, when GST rates were relatively higher, the average per month collection was around 89,000 crores. And during the current fiscal, in the 8 months that have happened, despite the fact that there has been a steep reduction on virtually every item, the average is around 95,000 crores. So this demonstrates the fact there is already empirical evidence of the fact that when you reduce the tax rates, the collection do not go down. The tax base expands, not only from a GST perspective, also from an income tax perspective.
Absolutely, and that is being borne out by the numbers. That's the Puducherry Finance Minister speaking. total 33 items that the GST, where the GST rate is 28%. Of the 33, 7 pared to 18% and 26. Okay, well, there's some confusion here still. So let's revisit that with the Puducherry Finance Minister in just a second. But let me go back across now to Uday. Uday, you know, one of the issues with respect to compliance was that new simplified returns filing. And our understanding is that that's unlikely to be taken up by the Council today. It's not part of the agenda. Also that the government is not particularly keen to sort of take that forward yet because they want to do a sort of large-scale pilot and ensure that the back end is fully operational and geared up before they roll it out.